Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning, October 19th, 2022. Well, the more things change, the more they kind of stay the same. So we got a 10-year this morning moving above 4% a little bit further, up almost 9 bips last I checked. So as you'd imagine, the dollar is up over 50 bips, so strength in the dollar, strength in bond yields. Stock market doesn't like it. We got futures down. They were down 50 bips. I think they're down a little more than that after housing data just came out. So talking about, let's go talk about earnings a little bit. Netflix showed you here that there is some merit to the ad-based sub that isn't cannibalizing the core customer. We talked about that a little bit like 3 weeks ago, 4 weeks ago, what have you. Hulu was kind of the example. So, interesting. We didn't pull the trigger. We thought this would be probably a nice little release quarter for them, which it's proving to be. Haven't pulled the trigger. We're still worried in general about, it seems like just too much competition in the streaming space. All of a sudden it's kind of a race lower in terms of price for a space that seems to be what you'd think would be relatively greenfield still. But so we're not involved. Netflix probably will remain uninvolved. I'll take a close look at the cash flows. If those look to be converting in earnest and they got a good handle on spending, maybe it's interesting. I will say, however, in terms of streaming services, Netflix is probably number one in terms of perception and consumer preference out there. Med device. So Intuitive Surgical reported last night. Great numbers. Stocks looking up 10% in the pre-market. They saw procedures for their Da Vinci robotic device up 20% in the quarter. They've guided procedure volume up higher for the full year. And we've spoken about med device quite a bit here. The potential for med device to make a catch up versus the other healthcare stocks in the space relative to the market. They've had a lot of issues in terms of staffing and in terms of supply chain. A lot of that slowly going behind them. Still like it. IHI is the ETF for med device if you want to play along. We do own it. It's our number 3 position. So we do own a decent amount of it. It's just an example of how, what I think is going to happen here. This is an example of how one space can bottom, certain stocks can bottom before the broad market. You do have less COVID patients, obviously in the ICU, significantly less than the last couple of years. That frees up space for elective procedures. That bodes well for the whole med device space in terms of their ability to increase volumes going forward. So I like it, and we'll see what happens. But yeah, in terms of relative to healthcare, IHI I think outperforms, and in terms of the broad market, IHI I think outperforms. And finally, Lockheed Martin this morning, Barrett upgraded it. Great quarter yesterday. I think the cash flow is really driving the story here. Barrett put a price target over $500 for the stock. They're doing a buyback equivalent to 12% of outstanding. They get back to growth in 2024, largely a supply chain headwind still for them in terms of aircraft components. But in the meantime, they're a cash flow machine, and I think people like it. Look at the action in the stock yesterday. You got a stable business. It looks like wartime activities are a secular growth trend, unfortunately, in terms of, countries are going to fortify their own defenses, right? You've got a pretty aggressive actor over there in parts of Asia, Europe, So that is going to be probably the move going forward for a lot of nations. And that's it. Have an awesome day. We will talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.